Are you curious to know what the market is like now that we are 6 months into COVID? Stay tuned. Hello everyone! Thanks for joining me today. I'm Amanda Vane with Keller Williams. Today we will be going over the market statistics for the 5 Bay Area counties, as well as taking a closer look at the local housing markets in San Jose, Sunnyvale, and Santa Clara. I just want to start off with a quick question. What if I can show you a way on how you can stop renting and own a $1 million plus home in 5 years? Stay tuned until the end of the video for a great tip on how starting with a small home can enable you to buy a bigger home. If you've ever been intimidated by home prices in the Bay Area, I will show you how easy it can be. August was a productive month for Bay Area real estate. Our numbers for new listings and sales exceeded what we saw in 2019, with about 4,300 homes listed and 3,000 homes sold versus 3,600 homes listed and 2,400 homes sold in 2019. Our net difference of 1,300 homes indicates an increase in inventory, and July saw a similar increase of 1,500 homes. In many areas, we have seen a high level of competition, so this increase in inventory is hopefully a welcome relief. More supply will give the buyers more choices, which should ideally keep competition and overbidding within reasonable limits. We see this effect reflected in the percentage over list price. So overall, when comparing 2020 performance against 2019 performance, we are listing more homes, closing more sales, and putting on a little more inventory. We had an inflection point in July when we flipped from COVID recovery mode to outpacing 2019, and this is a good sign for everyone. Transitioning from summer to fall and then to winter usually reduces the number of homes listed and has a lagging effect on homes sold, as seen in 2019. I will show you the individual city graphs that show this effect very well. Earlier in the year, buyers and sellers were both restricted during COVID and the initial shelter in place. So it makes sense that the repressed demand is showing itself now with a strong push for new listings and sales into September. Inventory is increasing but not by much, and is similar to levels seen in 2019, which should hopefully serve as a baseline for what we will see in the near future. Moving forward into the fourth quarter in the winter, real estate in the Bay Area normally slows down, so we might see that happen again this year. Or if demand continues to be strong from buyers and sellers, we might just see a small reduction and then a return of the upward trending market we are seeing now. Now, let's take a closer look at the individual city housing markets. In San Jose, the average single-family home was purchased for $1.25 million and sold in 9 days for 103% of the asking price, based on 448 sales in August 2020. This is up from 102% list price received we saw in July 2020, which indicates an overall increase in competition and bidding prices up. 3% might not sound like much, but when you are considering a home of $1.25 million, 3% is $37,500, which means on average a home listed at $1.25 million could get bid up to $1.28 or $1.29 million. Looking at days on market, we saw a median of 9 days on market for a home to sell, which was the same as July 2020, and shows strength in the market with a strong buyer demand and a good level of inventory. The low of 0 days could indicate a home that was listed and sold just for comparable purposes, or it could be an actual sale and offer accepted on the same day listed. The high of 811 days is probably tied into a high-value luxury property looking for the right buyer. We saw 567 new homes listed on the market and 448 sold, a net increase of 119 houses, which shows a steady increase in inventory consistent with the past few months. Moving to our neighbor Sunnyvale, the average single-family home costs $1.85 million, sells in 9 days for 103% of the asking price based on 53 sales in August 2020, July 2020 also saw the percentage list price received of 103%, indicating a continued level of high competition and multiple offers. With a $1.85 million median home price, Sunnyvale is up there, but the lowest cost home was purchased for $1.15 million, so it's not impossible to find a home. Don't forget to stay tuned until the end to learn about how you can afford a home like this. With a median days on market of 9, that means homes are selling quickly. Paired with the 103% list price received, statistics shows that demand for housing is strong. In August, we saw the Sunnyvale inventory add 13 homes with 66 new listings and 53 sales. This is a fairly typical month. Sunnyvale is a smaller city and doesn't see inventory fluctuations of more than 10 or 20 homes. And the past few months have been showing a positive trend of adding 10 to 20 homes per month to the inventory, with equally steady increases in homes listed and homes sold. On to our neighbor Santa Clara for August 2020. The average single-family home was purchased for $1.5 million, sold in 9 days for 104% of the asking price based on 58 sales. This is a big change from July 2020, where the average home price was the same but sold for 13 days at 103% of the asking price. This shows increased competition, which is consistent with what we are seeing in other cities. The lowest priced home sold for $932,000 and would be a great deal for someone looking for move up from their first condo purchase. And the high home of $2.5 million is representative of a recently remodeled home with premium finishes. The change from 13 days on market to 9 days on market shows a decrease in inventory due to more home sales than listings, and shows that competition is increasing in this city. The low of 0 days and high of 84 days are fairly typical. This is similar to what was seen last month and is consistent with the other indicators we are seeing in list price percentage and days on market for strong buyer demand and good seller representation. Thanks for listening. Now it's time for the hot tip: how to buy a $1 million plus home. Let's say you are renting an apartment for $3,500. You could take that same monthly payment and buy a home for $600,000. Assume that there is a 6% increase in home value per year, also known as appreciation. Assume that you will sell after 5 years as a primary residence, so you don't have to pay capital gains tax. Assume that it will cost you about 10% to sell a home. At the end of year 5, you have a net value increase of $202,935. Assume you won't pay any tax on capital gains up to $250,000 since you declare it primary resident for a minimum 2 out of 5 years and you are single. Assume 10% cost to sell at $802,000. Assume you built up $90,000 in equity over those 5 years, which is average for a 3.5% down, 30-year fixed loan for $579,000. Total potential profit is about $212,000. And this is enough for 20% down on a $1 million home. How easy is that? Get out of renting and buy a home. If you would like me to go over your scenario, don't hesitate to reach out to me. My contact information is below. Thank you for staying until the end. I hope you found this video helpful. Make sure to like and subscribe to my channel to stay up to date on all things real estate in San Jose, California and the surrounding Bay Area Silicon Valley. I will see you next time. Bye-bye.